Hello, hello. Dylan Lange, branch manager and senior loan officer with Evergreen Home Loans. Back at you with another product video. And this one is on the Washington State Bond Program. There's many names for this program, acronyms for it, but we'll just call it the State Bond Program. This is specific to Washington State, however. It is brokered through Washington State Housing Finance Commission. Their website is very simple. It's WSHFC.org. And I'm going to explain to you how you can save thousands of dollars right now in pricing by using this program. This is a very slept on program that really has just recently resurfaced. I have actually not originated this program until recently for about 4 years. It just has not been relevant through COVID. The pricing was not attractive. But you got to look at this pricing right now. You got to look at this program. There's lots of opportunity right here. Before I jump into it, though, I do want to make sure you direct to hit that like and subscribe button to follow any other product videos, market updates, anything like that, anything mortgage related. I do monthly market updates, monthly mortgage updates, and I also, any new products that come out or product updates, those are going to hit my YouTube channel. So make sure you do like and subscribe. Also, WhatcomHomeLoans.com is my personal website. This has all of the monthly mortgage updates, all of the product videos, all of my testimonials where you can apply, anything about myself or the team. Great resources here on WhatcomHomeLoans.com. But okay, let's dive into it. So WSHFC.org, you can find a ton of resources. I want to start out on showing you how to navigate this. This is a public website. Anybody can look at it. If you go here, you can look at for the homeowners or for home buyers. There's a ton of great information, but I want to show you on the for lenders page. So on the for lenders page, let me make my face a little smaller. This is where you can find a lot of the program manual and forms, which is where I'm going to show you. This is a 100-page document on what you can and cannot do on this program. I'm going to tell you guys the highlights of it. But once again, feel free to go crazy on this website. Once again, just go to WSHFC.org, homeownership for lenders, go to program manual and forms, and you can actually find this program yourself. So you scroll down to Home Advantage Program PDF. The confusing part about this program is there's the Washington State Housing Finance Commission program, which they call the Home Advantage Program. That's your first mortgage. There's also second mortgages that you can get if you do not have a down payment. For this video and just for time, we're going to talk about the Home Advantage Program, which would require a down payment depending on if you're a first-time home buyer or not. If you're a first-time home buyer, there's a 3% down option, conventional minimum. If you want to go FHA, it's 3.5% down. And then if you're not a first-time home buyer, it's 5% down. Many people get confused that you need to be a first-time home buyer to use this program. It is absolutely not true. To do the second mortgage and the zero down, some of those programs require you to be a first-time home buyer. Okay? So you can go into this Home Advantage Program Manual, which kicks you into this big old 100-page manual. I wrote down some notes here that I'm going to go over that what I've seen with clients that I think is very, very important to talk about. So once again, I wanted to debunk. You do not need to be a first-time homebuyer to use this program. To use the zero down program, there's some of those that you need to be a first-time homebuyer, which means you cannot have been on title for the last 3 years. A lot of people think first-time homebuyer means I can't have ever owned a home in my life. It's not true. It just means that you cannot be on title for the last 3 years. However, for the purpose of this video, you do not need to be a first-time homebuyer for the Home Advantage Program through Washington State Housing Finance Commission. Okay? The other thing is you can actually get a non-occupant co-borrower. That means if I want to buy a house, let's say I don't qualify for some reason because of my debt to income, maybe we can't use my income or something, I could have somebody that is not going to live in the home co-sign on my mortgage for this program. So that's another cool thing about this program. Also, the income limit, when I first got into lending, the income limit was about $97,000. Now it's $180,000 annual yearly. Okay. Well, of course, annual yearly, but statewide, pardon me. So you cannot make more than $180,000 a year. That that opens it up to a lot of different people. At least in my market in Whatcom County, that's great, especially if you have two borrowers. Not a lot of people are making over $180,000. Places like King County, you may start getting towards that. But $180,000 is the income cap. Last year, or maybe the year before that, it was $145,000. So they've really loosened up on this program. $180,000 income limit. There's also something that I'm going to show you on the pricing that has to do with AMI. It's the area median income, 80% of that. And I'm just going to talk about Whatcom County for the video here because that's my predominant lending area. 80% area median income in Whatcom County is $82,000. $82,080. You'll see it right there. So there's different pricing if you make under $82,000. If you make $82,000 to $180,000, then that's a different set of pricing. So I'm going to talk about that. Also, property type. So you can do manufactured homes, you can do condos, you can do stick-built homes, you can do single unit, so 1 unit properties. You can also do duplexes. The only requirement is it needs to be a primary residence. This is not for investment properties, not for vacation homes. Okay. Down payments will be reflected on depending if you're doing a government loan or a conventional loan, depending on if you're a first-time home buyer or not. It depends, if it's a single unit or a duplex, there's different down payment requirements. Just reach out to me if you have any questions on that. You also need to take a home buyer class. You can do it online. It does take a few hours, but once I explain the thousands of dollars that you can save right now on your pricing, it is 100% worth it. There's also debt to income maximums. However, on FHA, it's pretty unique. FHA has a debt to income ratio max of 50%. However, when we run it through DU, which is our direct underwriter, if you get an approval over 50% debt to income ratio, we could do the loan if it's approve eligible. State bond had a hard stop at 50. They've removed that now. So you could potentially go to higher than 50% debt to income ratio, which means your debt is higher than 50% of your gross monthly income. So it helps borrowers qualify for more. Okay. Those are some just pretty unique program facts. Let's get into why you need to know about this program. Okay. If you go to the just main page here, and you go to today's rates. Okay, it's right here. It's this tab. You go to today's rates, click here for today's rates. This is going to show you the rate sheet for state bond. Okay, there's a bajillion different options. I'm going to simplify it here for you today. Okay, home advantage, government. So let's talk about, so these are the program types. Government would be your FHA, your USDA, things like that. Freddie is your conventional Freddie, and Fannie would be conventional as well through Fannie Mae. Okay. Then there's different types. Under 80% AMI, which means you make under $82,000. Okay. And then there's over 80% AMI. Sorry, this one, over 80% AMI means you make between $82,000 and $180,000. And then this little section, no DPA, that means that you're not using the down payment assistance. So if you need that second mortgage because you don't have the 3%, 3.5%, 5%, so on percent down, then you need the down payment assistance. Once again, not talking about that for this video. So we're going to talk about just the no DPA options. So what this means is with Freddie, if you make under 80% AMI, okay, you make under $82,000, you're going to get a 7.375% interest rate at zero cost. See, the origination fee is zero. Okay. This is as of August 13th when I'm shooting this video. Rates move every day, can move multiple times a day. So take this with a grain of salt. That's why I'm explaining how to read this sheet. Okay. So 7.375, 0 points. If you want to pay 1 point, which is 1% of your loan amount, it's 7%. Okay. If you make over 80% AMI, it's 7.25 for the same 1 point buy down, or 7.625 for no buy down. Okay. Because if you make less money, they want to incentivize, give it to you for basically a cheaper cost. So let's take away the home advantage program. If you're just getting a traditional mortgage, Fannie Mae, Freddie Mac, there are certain things called loan level pricing adjustments that adjust the pricing. Okay. Fannie Mae and Freddie Mac set these to basically, it's a risk tolerance thing. If you have a lower credit score, right, your interest rate goes up, there's a higher LLPA, loan level pricing adjustment. If you're buying a condo or a manufactured home, there's an additional LLPA versus a single family home. If you buy a duplex rather than a single family home, a 2-unit, there's an additional LLPA. So once again, if you're a cookie cutter, over 780 credit, single family home, down payment, the pricing's it's pretty nominal different. It's not a big deal. But if you add any of those layers, let's say you're buying a condo, let's say your credit is sub 780, let's say you're buying a duplex, let's say any of those different things apply, then you need to look at the Home Advantage program. Let me give you one example. Let's say I'm buying a condo. Okay, my credit's 710, so it's not 780, which gives you optimal pricing with Fannie and Freddie. Let's say I'm buying a condo, 710 credit, I've got 10% down. Let's say, just for giggles, that I make over 80% AMI. Okay, so the 7.625 is going to cost me 0 points. Okay, because I make over $82,000. Well, I ran the same pricing today for a condominium. You have a 1.25, or excuse me, you have a 0.75 point add. Remember, 1% is 1%, or 1 point is 1% of your loan amount. So you have a 0.75% add. So if your loan amount's $100,000, that's $750. You have a 0.75 point add for it being a condo. And because my credit is 710, I have another 1.25 point add. That means that same 7.625 is going to cost on a, what did I run this at? A $630,000 loan amount. It's going to cost $13,000. It's going to cost, for that 7.625, it's going to cost 0 on the state bond program. So once again, any of those little things, adding a condo, under 780 credit, maybe a duplex, lower down payments, any of those things, you need to look at the Home Advantage program. That is saving $13,000. I just switched 2 borrowers over to this program, saved each of them between $5,000 to $7,000. Both of them were buying a condo. Both of them had under 780 credit. So once again, you can own another home and use this program. You can have a non-occupant co-borrower. You don't have to be a first-time home buyer. You need to make under $180,000, and the pricing is very, very attractive. So once again, you need to follow the pricing on this sheet. Please do contact me if you have any questions at all about this program or qualifying for it. You need to be working with a licensed loan officer that's licensed to do these programs, because we have to broker them through the state. I'm licensed. I've been licensed with this program for 8 years, but you need to make sure you're working with a lender that has multiple options so you're not missing out on a gem like this. Contact me for more information. Thanks.